So I'm now going to just jump in with this and show you what we're going to cover today. Firstly, I'm going to emphasize, I'm going to start this whole thing off emphasizing the fact that deals are partnerships, they're not investors. We don't actually look for investors. We don't want investors, we don't want licensees, we don't want distributors. We want partnerships in those industries who become investors, become um, uh, distributors or licensees. And in fact, this deal was an investor and a licensee because once they invested in it, they took over and covered all the other. So you can see how it can be a bigger benefit if you're not going in there saying, I want you to invest in this and here's the return on investment. Our deals, when we put them to the people, are nothing to do with return on investment. And that's important differentiation. We use the Cornerstone Investor Model, which I invented in 2014, and I'm not covering that today, but if you want access to a replay on a webinar we've done in the past on the Cornerstone Investor, by all means, ask me after this. Okay, after that, I'm going to go through the commercial modeling process and the role that that plays in getting you from 10 to 4 to 1. And then after that, we're going to talk about layers and players, because the commercial model, believe it or not, is where the value of your project lies. It doesn't lie in the product. It's actually in the commercial model. And if you have the better commercial model, you'll always make more money. And in fact, if you've ever watched an episode of Shark Tank or one of these shows, you'll see that the sharks are looking at the project and trying to calculate what's the best commercial model, and the inventors are talking about their wonderful product. That's nothing to do with it. If you can make money out of that product, there's probably 6 ways from Sunday to make money out of it, but you have to know what the best one is, what the least amount of risk is, what's the quickest path to market, everything. And if you can work that out, calculate it really quickly, then you've got a hell of an advantage over anyone else with that product. And in that process, we look at the layers of the commercial model, starting with who has the problem and how do we solve it, and how do other people solve it, right through to the people who supply components to you to build this product, whatever it's going to be. And we're also looking at the players, who are the big emerging and current dominant parties in this industry, and who are the number 2 who wants to beat number 1. They're the ones that will be competitive and look at alternative offers. And that's what we want. I'm going to walk you through the 10-4-1 qualification process, because that's everything about today. And I want to make sure that you walk away from this knowing that you can, if you've got a project ready to go, you can pretty much calculate how you can get the top 10 and then how you can bring those to the big 4. After that, we're going to talk about using leverages to identify those top 4. And then beyond that, I want to do a Q&A with one of our members. He's not on the line yet, but if he comes on a little later on, I hope he is, because he's coming back from a holiday and he may not be back in time. I'm hoping he will. That's Richard. And so if you are here, Richard, just put me a note in the chat. That's fine. So once we've done that, if he's not here, I'll answer any questions, because I did the deal with him anyway. So, and after that, I'm going to spend 5 minutes talking about how to join us for $100 if you're interested in that, and how that all works. And then we'll go into the Q&A and I'll answer any questions you have and work you through so you can walk away with this with everything you need to get started. Okay, so at the end of this, you can either get started on it. I'll give you a link to do that, or you can book a call with me. Either way, you get a free book. So if you want a copy of one of my books, you can do that. If I decide you're not ready for the program, you get to keep the book anyway. If you decide it's not for you, you can walk away within 4 weeks. We don't have any contract holding you in for the first 4 weeks, and you can keep your book. Okay, so a little bit about me. I've done this for since 1983. My first project was a telephone accounting system, it was called. If you ever checked into a hotel anywhere in the world in the 1980s, when you exited, you got a bill for your phone calls you made from the switchboard or from the room, and that was my telephone accounting software, and that basically told you who called who at what time of the day, how long they spoke, the cost from the telco, and the cost that the hotel billed you for it. So you could see everything in the deal, and at what time of day, start and finish of the call, everything. So We did all of that. We put it on an IBM PC in background under interrupt because it was dual floppies in those days. And then we sold that. We built it up. We distributed it to most of the major PABX manufacturers. That's the switchboard people. And then later on, when 1987, there was a big world stock market crash in October 87. We were affected by that. So we turned and sold the entire thing to a large Japanese PABX company, and we exited. But from there, I worked with universities from about 1986 all the way through to about 2010, and I've had my own project since about 1988. So I'll now just walk you through. That's pretty much all you need to know about me. I've done this. I've done it for big corporations. I've done it for little guys. Now, what we're going to focus on today is all about the knowledge gap in between early stage commercialization. The pathway is early stage commercialization, sorry, and in between the ideation, which is how we formalize and then certify the idea, right through to pre-scale. Pre-scale is where we can put you in front of a venture capitalist and they can say, oh, let's go ahead with this. We'll fund it. Off you go. We'll now get 10 times. We'll 10x your project. We'll show you how they do that. So the whole process, the gap, the knowledge gap is in between the inventing and the admin and operations. Admin and operations is where you can run the company, you can run a project if you've got money and income, but in between that and getting started, you probably don't have the skill set given to you if you're really good at inventing. You may be the best engineer, the best scientist. It doesn't matter. If you don't have the innovation or commercialization process, you're always going to struggle, and you're always going to rely on consultants or other people. And that can be dangerous in this line of business because we're all about secrets. So post-ideation is the beginning. So once you've finalized and formalized the idea, you might have a patent, you might have lockdown non-disclosure agreements with everyone, and you're ready to go. You've said anything that comes in after this is not going to be part of this product. It's going to be iteration 2 or version 2. We're going to go ahead with version 1 and bring it to market. It ends at pre-scale. As I mentioned, pre-scale is usually venture capital firms or private equity funds, and they look at it and say, okay, it's got the 4 things we need, which is cash flow, high growth. It's in our area of operation. Usually they call that their silo. So if they're in aviation, if you're in aviation, you fit their bill. Otherwise, they're not interested because, believe it or not, one of the big things they bring to the table, bigger than money, is actually their Rolodex. For those of you with grey hair, you understand what a Rolodex is. It's all the contacts, every contact they've ever had in the industry, and they can turn your product into money really quickly. And they want to take advantage of that. So if they can get that, and the 4th area they're looking at is how negotiable you are. Some people just inventors are a different breed. Sometimes inventors just say, no, I want $10 million and I want to give away 1% and I want it all up front and I want to pay to me so I can go on a holiday and I don't really want to give it to the company. That really isn't going to fly. But anyway, there are some people like that these venture capital companies will look at it and say, I can't do that. Now, their offer to you will be, we've looked at your project. We think if we put 10 times the equity in, we can get 100 times the output. Would you like to go into partnership with us? And of course, it is an ideal thing to do because you're not funding the growth and it's going to be massive growth. And you want to be able to pull a salary at least while you're growing before you then become quite big and you can then get your benefits. So the process, all of that is called the early stage commercialization process. And as I said, post-ideation, pre-scale. Every inventor needs to own this. If you don't own it, you're always going to be begging for money, and you're also going to be hunting for somebody who's reliable enough to do it for you. Once you own this process, you're going to be free of consultants forever because this is the gap, the knowledge gap between ideation and pre-scale. There's no more reliance on advisors. These invention skills that you get, they're not commercialization skills. I can't emphasize that enough. You need to understand that you need the commercialization skills to in between the invention and the admin. And if you can't get all 3, you really can't make money out of innovation. Okay, so I want to just work with you on how most people see how innovation works, the early stage commercialization, and then I'm going to show you how it actually works. So firstly, if we talk about the idea, we all come up with an idea. Once we've got an idea, we then say, well, let's get a patent on that idea. We get a patent, we now own something and we're proud of it. Let's get some funding so we can turn this patent into money. We get some funding, we then go out and let's look at either scaling it, that is building up the company, or we're going to license it, find somebody else to build up in their company and give us some money for that. And then once we've done all of that, we either own it in perpetuity or until a 20-year patent runs out, or we dispose of it. And that becomes a trade sale. It could become a license. It could also be an IPO or just a straight sale. An IPO is an initial public offer. It's really getting a company listed. Usually with innovation, we don't list in our own right. We list as an element of another listing, and that the companies who might have 20 years of very constant cash flow, but they have no blue sky to attract new investors. So they buy in an idea that fits well into their portfolio, and what you have might fit, in which case they'll pay a good dollar for it. Usually not cash, usually in shares. Now, that can work, but it's got so many gaps in it that it makes it so hard. And there's so much risk involved in getting from the idea to the IPO. So I want to show you how we do it. What we start with is the same idea, but then we build the commercial model. The commercial model is where all the value is for you. And that includes things like working out the proof of concept, the market validation, the pricing, costing, and sourcing involved in it. We need to calculate what the risks are for everyone, for you and for everyone else, and then all the revenues. And so we can then see what we want to get out of an investor or partner, but also what we can give them in terms of mitigating their risk and building them asset that doesn't cost us anything. So once we've got our full commercial model, we're ready to patent. We try and only do a provisional patent. And the reason for that is because the provisional patent might be a cost of anywhere from $199 in the US right through to $5,000 if you use a patent attorney. And believe it, it's not a disadvantage to use a patent attorney. They will bring value to the sort of patent building and the searching. But if you do that, you're up for $5,000, and that's a lot different between $60,000 and $100,000 that we normally would do if we got a full patent. So we want to avoid the full patent for a full 12 months, because if we can use this commercial model to get the cash flow positive, guess who's paying for the provisional patent? It's not you. Now it's the project, and that's important for you. Then we want to build your partnerships. So we want to find people who will be active in our one of 4 significant cash generating transactions, which are funding, distribution, licensing, or a trade sale. And then once we've got one of those, we just keep going with the next one and the next one and the next one until we've covered geographic and demographic areas, and we've got a strong growth. And then we're ready to present this to for pre-scale to a public, a private equity fund or a VC, a venture capitalist. So at that point there, we've got value. We can prove we've got value. Okay, so let's keep going. As I mentioned, the area we're going to be hunting in today is all about partnerships, and I'm going to show you the 10-4-1 of how we identify and secure partners. Okay, so the objective for today is fairly easy. I want to run you through that so you fully understand. We're going to identify entities in the value chain who can partner with us to build you your first significant cash generating transaction. We're not into profit. We just want to get you cash flow positive, because you can then repeat this process. We create the commercial model for you for the project, and I'm going to show you how you will go about creating your own commercial model if you take my Done By You program, and that's, for $100 you get started and off you go. You can build the 10-4-1 assessment tool. You can use that assessment tool to build your 10 list of top 10, big 4, and the one that you pitch to first. And you'll know who to approach. We'll show you how to identify take from the 10 to the 4 using leverages, and how to stack those leverages so you see who is the best deal, and they're going to be your first one. And then we build the pitch you need using our Cornerstone Investor Framework, which again is in my self-paced learning online stuff, which we make available. In the past, it's been available to our Done With You program, but now it's going to be on the Done By You as well. And finally, we're also going to secure you your first significant cash generating transaction, because we'll be with you week by week by week all the way through while you're doing this. You spend 4 hours a week of your time, and you spend another hour with me or more, because once a week we get online, you ask me anything and I'll answer all your questions, or everyone's questions are answered, and then we keep going. And then once you've got that, you've got your first significant cash generating transaction, you just rinse and repeat. You work your way all the way through to pre-scale. You've eliminated the risk. Now, it can be monotonous doing that, because I'm encouraging you not to take your second project off the shelf and start that. I want you to get your first one from where it is, zero to significant cash generating transaction and to profit, not to profit, but to cash flow positive. And then you can rinse and repeat all the way through to profit. And once you reach profit, then you can take your money and go and do your second one. If you jump too early, you're juggling, and that can become dangerous. Okay, so let me talk about the commercial model. In the past, I did the commercial modeling with everyone. So I used to book everyone who was in my programs on the Done With You program in the middle. They would come to me and within the first 4 weeks, and I'd book them into a 4-hour ideation and commercial modeling workshop. Sounds a lot, but we start with 244 questions, and that blows out to about 500 data points on a mind map. So you can see that it builds it out, and you get an opportunity to, from there, you will be able to get an understanding of exactly where you are, where you need to be, what the big issues are for you, what you've got in terms of resources to throw at this, and what you want to do with it, what the plan is. And this thing will generate you an entire stepped action plan, fully costed, fully sequenced, and it also be allocated to the different people in your program. So you can allocate it to all your managers and the likes. If you're a bigger company or an R&D team, you might not be, in which case your name's on everything, but that's the way it is. Having said that, I did an industrial one last week where the guy said, I don't have anyone. He works on the mines, and so he flies in and flies out week by week. He said, I don't have anyone to help me. I said, well, I can get you somebody. We've got our IP mentors who have experienced in this. Tell me what you want. He told me what he wanted. I found him an IP mentor. We went off and did it. So he just bought a block of 10 hours and got the project done for him. So how does the commercial model work? Well, as I mentioned, what our top eight topics are is we start with what is the project. And I'll go through some of these, but not all of them. Once we understand what the project is, what's the target market? Who are we approaching on this? And we also talk about working backwards from who has the problem and how they solve it, and who they go to solve it, how much they pay to solve the problem, how much it would cost them if they wanted to live with the problem, all that sort of stuff. So we have all of those questions in primary and secondary questions. They go down to tertiary questions, so you have 3 layers on the questionnaire, and we'll show you how to do that. You get the questionnaire as part of this. You also get access to this software for 30 days free, on the basis that the company that owns that software wants you to play with it, because they know you'll get hooked on it. A lot of people do. Once we've done the target market, we then, what's the industry? We want to see who the players are, how big they are, how well they played well together. Are they an oligopolistic market model? Will they actually try and squeeze you out, not let you in? Will you be better off partnering up with one of the big guys to get in? We need to know all of those answers before we start. Then we also want to look at, where are you right now? We want to make sure that you're not an idea. So we start with an idea, then we go to a concept, then we go to a project, then we go to a company, then we go to an exit. And so we want to make sure that within those steps, you're somewhere other than, I've got a really good idea, I want to see if I can do something with it. We also work out, where do you want to be? We set your objective very carefully to make sure that you can check off that you get to where you need to be. If you don't have a core objective and you don't have a plan, you're going to drift, and we don't want you to drift. Finally, we're looking at all the roadblocks that are getting in your way. What are the biggest outside issues that are impacting on your company or the project? What could impact on you that you can't necessarily control? We're looking at everything. It could be competitors, it could be political, legal, regulatory, societal, social, economic, competitive, technological issues, even shareholder issues. They can all impact on you, and we want to look at all of those. After that, we're saying, what have you got to start with? Some resources you have available, others you will be able to get. And more importantly, we're looking at what you need, because there are some you don't have that you need, and we need to know that you can get those. Because if you can't, the project can't work, and we don't want you to start a project you can't finish. And then finally, once we've got all of that, we can then build you that optimal commercial pathway, and that gives you your entire project. Now, I want to show you just a little bit in a quick snapshot of what these look like. So what is the project? There's one level, one and a half levels, if you like, of the questions that we put in there. And you can see it breaks out to various levels as you go, all the different questions. This all gets to you in this format, and you just click on it and start adding your comments to it. And it's just as easy as that. Just click and add. And if you're unhappy with it, you can drag that addition and put it into another area if you wanted to. It's very quick and easy. So once we've got the project sorted out, and there might be 100, 120 questions on the project. Once you've done that, we want to know what the target market is. So here's the first level of target market, problems we solve. We talk about that all the way through to can they live with the problem? And that's important, because if they're going to live with the problem, then they won't want to solve it. We need to know how much it's going to cost them if they decide not to solve it. And in which case, are we better than that? Can we put an offer to them that will make them want to solve it? And then we've got what the industry we seek to enter. I don't need to go into that because they're all going to be different from what you do. So I'll cover that. But where are you right now is an important one. So I want to know all of these: market validation, proof of concept, transition status. Are you ready to close and lock the inventing door and start the commercialization process and stay in there? And this is important to know, because if you raise funding to commercialize something, and somebody later on says to you, well, that's a great bicycle, can you put an extra wheel on it and turn it into a tricycle? The temptation for you as a scientist or an engineer or whatever is to go back into R&D and do that. And you can't do that, because you'll be using the money that people have given you for commercialization in an area that they haven't allocated. And you don't want to do that, because you'll lose their trust very quickly, and sometimes you end up bankrupting the project, and guess what? You'll lose. So we look at everything, what you've got, what you need to throw away, what you need to keep, everything. But when we're looking at our highest priority on collaboration, and they are, what do you want to partner for investment, distribution, licensing, expansion, finding a buyer for the project. And they are within there is our 4 significant cash generating transactions. Now let's go to the optimum commercial pathway. There's 3 different elements of that. The first one is program objectives. So this is what we want to do. Where are we right now? This particular project I've taken this from, we had licensing followed by licensing in 6 months, trade sale in 3 years. I think it was a trade sale in 5 years actually. But it could be just organic growth. I've decided to grow this out because I'm the expert at it. No one else can do it, but I need a plan to do that. So we show you how to do that. Once we do that, we look at the optimum commercial model that you want to use to get that. And that goes very deep, and it can go 5 or 6 layers here with all the questions provided to you. And as you click on one, it gives you the next one and the next one. But today we're only focused on this 10-4-1. That's all we're going to play with today. So you can see for everything you've seen so far, it's not applicable for what we're going to talk about today, but it is very applicable for commercial modeling for what you need for your program. So I'll now just go to the layers and players, which is how you get your top 10. So firstly, we look at the layers. We start with users, users of your idea or potential users, the suppliers, the retailers, wholesalers, franchisors, if it came to that. Who are the people who can manufacture it on your behalf if you're not going to go into the manufacturing business? And why would you? Because it would cost you a whole lot more than a few $1 million to set up a manufacturing plant when somebody alongside you may have a manufacturing plant running at 50% or 60% capacity, and they would love to build it up to 90% by taking on your project. So it makes your project a lot easier and a lot cheaper as well. So, and a lot quicker. We look at people who are already established in the industry or already established in the market, because the market players are just as important as the industry. And I did one 3 or 4 months ago, which I presented for funding, which was on sheds. And sheds are sold by franchises in all different areas around Australia. In this particular case, it was an Australian project. And that guy had 11 shed franchises, total of 250 or 260 franchisees around the entire market. So he wanted to get into that. He picked one franchise and he was able to nail them, give them a significant competitive advantage over all the others, and he pushed it through. So we want to know who's in the industry, who's in the market, who's prominent, who's number two, etc. We're also looking to see if one of the number two or number three is ready to challenge the dominant player and is looking for that sustainable competitive advantage that your project could offer, the fries to their burger, if you like. And we're always looking to see if we can get one of those as a public listed company. And the reason why, I'll explain that very quickly, we use a system, a cashless transaction, to get you cash. So if you want to sell your project, you take a partner on, that partner's more than 50% probability they will buy the remaining shares from you at a later date. Certainly you can make an offer to them and they will take it. And the reason for it is just consolidation. But they already have a value they've agreed to because you've seen it. If they're a listed company, they would have their auditors value their share every year. So you get to see how they're growing their share, and you can have an unchallengeable value of the project going forward, because their share might be, let's say, 20% or 50% is worth so much by their auditors, and you can immediately say the rest of that's mine. So therefore, pretty easy. So when you go to put it up for sale, let's say your project is now, your share of the project is worth $5 million. They don't have to come up with cash. What they can do is issue you with equity in their company for $5 million worth of equity, and maybe with options as well. And they just do that through a circular resolution to shareholders and say, we'd like to buy this company. We think it's worth $10 million. We valued it at $5 million, and we're going to offer him $5 million worth of shares. And he's coming on board with us. So lo and behold, shareholders nearly always say yes. They take the project on, and when they do, you have shares in the company. You make sure that if you've traded for 3 years or more, there won't be any escrow period, which would stop you from selling immediately. But you'd have to defer the selling. But if you don't have an escrow period, you could literally ring your broker a minute after you walk out the front office door with the paper in your hand and say, dump those shares, get me cash. And that can happen. I can tell you that you'll pay a lot of capital gains on that in terms of tax. So you're better off holding it. But you can certainly liquidate enough for a world trip or whatever else that you've always wanted, or to get you back some of the money that you ploughed in very early in it. It's okay. But you're still on board and you're still a player in that company, and probably a consultant or advisor as well. Okay, so now we go from our top, we picked our top 10. How do we get to top 4? We use leverages. Leverages are the advantages we can offer somebody that don't cost us any money. So they're uncosted value, but we want to test those and make sure that they're value to them, uncosted to us. So we value each leverage. So, and I'll walk you through some of the leverages we have from their perspective. And then once we've got the value on each of those leverages, we'll stack that value. So we want to add that value up to more than, for instance, if we're raising $500,000 in from an investor who's a partner from within the industry, then we want to make sure that we can stack sufficient leverage value to be more than $500,000, so they can look at this and say, I'm not taking any risk here. This is a no-brainer. So you then select your 4 with a leverage value greater than what you're asking for. And that is how we get our top 10, our top 4. Once we've got our top 4, we're going to ask you to go online and look at the online annual reports, and you go into the annual reports to the auditor's report, because the annual report is put together by spin doctors. The auditor's report is put together by auditors, and they must tell the truth. And so they're the only thing you can believe in any sort of annual report. And when you go in there, you look at how they've handled mergers and acquisitions in the past. You can see how they valued it, how they implemented the deal. They might even mention who within the company was in charge of that acquisition, in which case you can start to target that person. Also, would be looking to check accessibility of those big four to see which one I can get a decision out of, because all of their decision makers are in the country I'm in. I don't want to have to delay the due diligence process by having it all go overseas and somebody else make a decision that I can't get in front of. That can always be problematic. So once we've got our down to 4, we picked one. Now we want to qualify that one and do a pitch deck. Our pitch deck is our 12-point pitch we use out of the Cornerstone Investor Model. I'm not going to cover that today. I'm not even going to cover leverages. I'm going to show you one set of leverages I used in a project, which I demonstrated last month on a trade sale, which was a very big engineering firm sold. They manufactured a product which they had 6.5 years of forward orders filling their entire order books, and they sold it. It made tip bodies for trucks, for mining trucks. So it's a big operation. So I want to know, firstly, do they attend trade shows? If they do attend trade shows, I'm going to know how to get to them, and that's going to be important for me. Do they have market share? What market share do they have? Who are their competitors? Who are bigger and smaller? What do their products cover? Do they complement what I've got, or do they compete with it? And that's important, because it's very rare that they're going to say, oh, your product's better, so we're going to dump ours. No, they'll give you a hearing to learn all about your product to see if they can enhance theirs, but they won't dump their product. It doesn't make sense to pay for a new product. But if it complements it, that is their X2000 model, whatever it is, could everyone who's bought one of those would probably go and buy your little product as well, so they can add it to the X2000 buyers, and they've pretty much got a market channel set up for them. We also would look at how, using that company report, how they handle mergers and acquisitions in the past. I also like to gather the names, emails, and phone numbers from within LinkedIn. So LinkedIn there's another little product which you can get, an app which loads into LinkedIn called ConnectSoft. Make a note of that if you like, because ConnectSoft will give you names, emails, numbers. They charge a little bit per entry, so you wouldn't do it for, I've got 30,000 inventors following me in LinkedIn. I don't want to get all your emails and numbers and everything else. There's no point in that. But if somebody wants to give me, who makes a comment and I want to find out more, or send them something, I can use ConnectSoft, get their email address and flick them over something. So it could be handy for that to take a conversation offline, which is what I want to do. I don't want to do a pitch across LinkedIn or any other network. I then can build my 12-point pitch using leverages. And once I've done that, I can stack those leverages to offset their risks, so they understand that I've taken the risk out of their decision. And then I use the scripts that in our program, our Done With You program has all the scripts, and for getting an NDA, getting NDA signed, that is, getting appointments, all of that, it's all in there. And we allowing that as of this Friday, the people who do the Done By You program, that's the do it DIY, if you like, they'll be able to use those scripts as well. So once we do that, I'm just going to give you a quick overview of leverages. As I mentioned, this was for this one I put together particularly for that particular tip body trade sale. And so you can see there, we usually have 14 leverages we check. These ones are a little bit different, a few more. He had 6.5 years of forward orders. So all his profits were mapped out for 6.5 years. Everything in inventory on the floor was already sold. So as he bought it in for a particular project, and people put up 50% deposits to get their trucks because they were big ticket items. We're talking $250,000 up to $1 million. He was doing 420-ton tip bodies. They were big. They had smaller ones, but that was the biggest one they did. So access to skilled personnel was important for him, because he had skills that other people that he wanted to pitch to would need, and vice versa, so they could complement each other. He was also, because he took the license from a guy in South America for this particular tip body type, he had another 12 years to run on the 20-year patent, so he could offer 12 years exclusivity, and they could call it whatever they like. That's what white labeling is. As it is, they still called it what it was, which was DT High Load. It still is today. We showed them how to recover lost sales. If they've gone to competitors and pitched a deal and they lost it, the competitor may not have gone somewhere else. They might have just said, it's all too expensive. But if it can come back and say, okay, now we've got economies of scale through this acquisition, we can offer you a better deal. Will you take this deal? Maybe they can do that. In this case, we're able to do it. And so we calculated all of these all the way through. Cashless transactions I've talked about. So how do we then map it? We showed him that this is what we're asking for, and this is what we want to spend it on. Rent, inventories that are existing and going forward, operational costs, and this is what we need to have in a year in advance to run it. You're going to need that money. You're also going to have a purchase price because this was a trade sale, so we asked for an actual purchase price. Normally it's not. It would be here's what we're spending on R&D or regulatory approvals or market testing, all that sort of stuff, in which case there's a price to be paid for that. So once we calculated that, we knew what the price was. We then said, okay, how do we offset the risk? Well, the first 12 months of the 6.5 years of sales to existing customers more than covered what we're asking for. So we could show them that that wasn't profits, it was sales, but we could show them that they had cash flow, which did the whole thing for them. So it was a pretty easy deal. So why this works is not unique, it's not science, it's just straight practical hands-on knowledge. What you do is you calculate the value for each target prospect on all the value for all those leverages. That way you're doing far less pitches and all of the leverages are stacked to cover that. Let's say you're asking for an investment of $500,000, which is what we normally ask for, to get to cash flow positive, not to get to profit. And what we want to do is cover that $500,000 in stacked leverage value. Once we've done that, we give them, you need a procedure and you need scripts to set your appointments, get your pitches, do the pitches, and drive everything through the due diligence process to get the deal done, including templates, checklist, everything you need, all built into the system. And we give you all of that. So you get, once you've done, it takes about 4 weeks to get from, if you're going to do one pitch and it didn't work, you might go back and do 3 others, up to 4. We don't do more than 4 deals. Your project will stack up if you do 4, unless you're really outlandish with what you ask for. But I'll guide you on that anyway, quite severely. So you should get at least 1 deal in 4 weeks. And once you've done that, you just keep going. We prepare the due diligence in advance because that way there's no holdups between, okay, you're ready to go with this, let's get it done. You can get it done from when they say yes in the pitch all the way through to the signature for let's launch. It should be about a 4-week process. Now, normally due diligence can take up to 6 months, but that is if you're not organized, and we make sure that you control and drive the program, the due diligence program. You tell them, this is what I want to do in the next 24 hours. This is what I want to give you in 7 days. This is what I want from you in 14 days. In 21 days, we meet again and we talk about how we put together the drafts of elements of an agreement we want together. And then from there, we'll build the agreement and sign it in 4 weeks. If you're okay with that, I'm okay with that. Let's go. Now, if you deliver this entire thing all the way through and you've got a deal and you've got your first deal and you've got cash flow, it's a process that you now own. No one can take this away from you. You actually own it. It's yours. So I want to talk to you now, just before we get started on our Q&A. I want to spend just 5 minutes. You can time me if you like. 5 minutes about our $100 a week program, which is coming up. It's being launched on Friday. So you guys are seeing it. It's being presented the first time today. So it's exactly like our Investors Academy Level 1, which is our Done With You program. The difference is we've taken away, we kept the group coaching. We've taken away the one-on-one calls or reach out calls because the reach out calls and the 4-hour workshop are the most expensive part of that. So in order to cut that out, we don't have to charge you $1,000 a month. We can charge you $100 a week. So you do your own commercial modeling. We give you all the questionnaires. We give you all the framework. And we also, my manager, the company that does the software, will give you free for 30-day trial if you don't already own it. A lot of people do, particularly in inventing, because it's a great product for that. So if you don't own it, you can get it for 30 days. That's all you'll need. You put it all together in about, it takes about 10 hours to get it. You can send me your work for review. I'll do it all. you can still deliver the deals inside 6 months. That's the most critical thing. And if you do that, then I'm able to help you and take you through for the next one, because you're with me for 6 months if you want. You don't have to be, but you can be. This is a done by you process, and that's where you save all the money. So you also get a 1 hour scoping session early, and you get a 1 hour where to from here later on as you exit the program. How it works is $100 a week. It's a payment plan for 26 weeks, but you can opt out in the first 4 weeks if you want, and you pay no more. There's no contract anymore. We want to make sure that the people on board are onboarded for a reason and getting things done. So we want to be able to land your first project in 3 to 6 months, and be well and truly on your way to the second or third by the end of 6 months. There is a single payment option, because 26 weeks works out to be $2,600. But if some people want a discount for paying up front, they can. $1,800, they get it. Now that's Aussie dollars for those of you who are on board here. So Aussie dollars in pounds is about £900. So it's very, very affordable. We also have an upgrade plan. So within the first 4 weeks, you decide, look, I want to get the done reach out programs. I want to get the workshop done by you, by me. That's fine. You can do that, and you get full credit towards the bigger program if you want. And we're going to open this program for 12 members only. That's all we can take, because we want to make sure that it works and iron out any difficulties we have. We don't expect any, because most of what we've done, we already have done for years, but we want to make sure that we can get it all done without overloading ourselves as well. So I'm recruiting from Friday, commencing in Friday. We're going to start in June, but people can actually get started straight away with the online self-paced learning. Now, if you want to jump the queue, here's an opportunity. You get your phone out, open up your camera. Don't need to take a photo, just point it towards that. That'll give you a yellow dot on your screen. Tap that dot and you're into the website that's involved for this. So what I want to do now is, that's the website in the long form. If you want that, I can give it to you later on. But you can click on the link here and get it. Once you've got that, you can check in. $100, you're on your way. I'll still need you to qualify your project, but I might take my time. It might be over the next few weeks that I'll do that. If for any reason I don't take you on, I refund you your money. You get to keep the book that I give you, because I'll ask you what book you want, and you get that. You'll also have, by that time, have looked at all or several of there's 45 hours of online self-paced learning and videos and checklists and templates and quizzes and case studies. It's all in there, all built into it. And we've had that built in since 2018. We've been adding to it every week. Now it needs, from you, it needs about 4 to 5 hours a week. The workshop will take you about 10 hours to do. It takes me about 10 hours, but I work with 4 hours, and then there's hours either side of it that I have to do. That's why we normally charge, in its own right, we charge the workshop $3,500. Now the software supplier will give you 30-day free trial if you haven't already had it. So you don't have to buy that if you don't want to. You can if you want. If you want one-on-one and the workshop, then you can have an upgrade path for you. Okay, so it's Q&A time. For those of you who want to talk to me about this program before you make any sort of commitment, by all means, $100 might be a lot of money to you. You want to make sure your project's ready. Daniel30mins.com. But you can also use that same link, this link here, use your same camera to get to this link, which is my calendar. And you can book in a time for me and spend 30 minutes free, and we'll talk about your project, whether I think I can get you over the line. So by all means, let's now pivot out of this and go to our Q&A. Now, my first question is, do